The following presentation is brought to you as a courtesy from Forex Academy. This is part of our service, Live Beginner's Course. If you find it interesting and wish to be updated on new releases, please subscribe to our YouTube channel or join our community at forex.academy and receive all our services for free. Your like is also highly appreciated. Enjoy.
So let's start off with defining the objectives of trading. First, we have education. And again, I would assume this is of key importance for most of the students. After the financial crisis, the need for financial education has grown substantially. We've very much seen that, of course. People now have a better understanding and more concern over banking and investing and many of the risks that come with making financial decisions. So, we're much more aware of these risks in the markets, and obviously if you on your bank account there, we've seen over the last few years that we're not actually earning profit or interest on our deposits. That is of concern for many of us, and that leads us to look for potential opportunity elsewhere. The growth in online technology has enabled a global community to speculate and assume forms of risk and investment in many different asset classes. The objective for many is to gain a high quality of education and expertise. And that's absolutely the case. That's what we provide here, and obviously we you know we see a great level of cooperation and understanding with our students, that they really enjoy these lessons. Speculation. In contrast to the more traditional long-term investor, the speculator enjoys jumping in and out of markets more frequently. Markets have become so efficient so as to move instantly when new information becomes available. Short-term profit making has now developed into a thriving new industry within the financial services sector. So for many of us, this will certainly be the case. Maybe not at this moment, but later on down the line, it will become definitive in assessing what type of trader you want to be. Many traders like to actually scalp the markets, which means just involve themselves in short-term trades, making 10 euros here, 10 US dollars there, 5 US dollars there, and trying to build their trading account throughout the course of the day. So it does lead us to allowing ourselves to develop ourselves for different opportunities. Capital appreciation, again, it is concerned with long-term growth. Financial markets present opportunities for demand shifts in a commodity to long-term foreign exchange appreciation from one currency to another. We've seen something like Brexit has really affected, had a huge effect on the price of sterling. So obviously, it is of value to you guys to learn why these markets are moving, to learn the extent of these moves, to learn how that holds weight or how it affects you in real capital terms for, the amount of money that you have in your bank account, potentially to another currency, and if it can provide opportunity for you, of course. Financial trading offers investment or method to not only protect capital from inflation over the long run, but to deliver a return with the objective of capital appreciation. Yet another side into markets is to actually look to use capital appreciation as a store of wealth when there is long-term inflation. Capital preservation, again, is yet another cause. The objective is clear, and safety is of utmost importance. Economic fundamentals like inflation can cause the real value of wealth to erode over time. It is often the goal of financial trading to look for safer investment opportunities to store or protect wealth from market uncertainties. So if we know a little about inflation, we'll discuss it throughout the lessons. It effectively is the change in overall price of goods and services in an economy. So if we're in negative inflation, you can see that we're actually not seeing the real value of our capital at any given moment. And trading income will be, of course, a goal of ours as financial speculators, both at an institutional and private level. Many speculate in the financial market solely for profit. Natural market forces of supply and demand deliver constant price fluctuations, allowing speculators to enter and exit the market purely for the objective of making a return. And again, they don't have to be long-term trades. As we look through the Live Beginners course here, we'll discuss many different trading opportunities on different time frames to actually look to make income from these markets on a daily basis. So let's discuss the financial markets explained. Really, what are the purpose of the financial markets? Well, they're there to facilitate yet a few things. Number one is price discovery, and that's very simple to explain. Any price of any product, service, or in relation to the financial markets is a direct function of buyers and sellers. They come together and create commerce, and obviously find an equilibrium between their interaction to deliver a price on that asset. And the price obviously moves in terms of a demand for buyers or a supply from sellers, and that's indicative of all these assets we'll look to trade. The raising of capital. The raising of capital is, of course, our main goal, our main purpose of financial markets. So if we think of our equity markets, which really are effectively showing us the level of growth in our economies. Let's take the DAX there in Germany, for example. We see these large companies like Deutsche Telekom or Deutsche Bank, they're going to the capital markets, they're issuing shares in the capital markets, they're looking for capital investments so they could potentially look to move across and invest and progress in other areas of business. So that opens up the markets, the free markets, to us to become investors. We can own a part of that company and obviously invest in the company's progress and look for return as a result. Transfer of liquidity, and this is something very much that we see. Liquidity is simply cash across the world, and the best example of that is, of course, capital trade flows. We see currencies shift and large chunks of capital shift as business is done across the world. So that is, of course, a key purpose of financial markets, to do this global business. And we're seeing this integrate much more these days. Support and extend international trade, and again, business creation is a key purpose of the financial markets. Financial markets are like any other marketplace where buyers and sellers engage in commerce. This interaction between buyers and sellers create a level of trade, question of value, and defines price discovery. Price charting is merely the reflection of this price discovery as agreed fair price value. Okay, so I want to make that point. So as we go through, of course, the course, we'll go on to a more practical side where we'll look at the MT4 price chart. For many of you, it might be perhaps the first time you'll see a price chart, and it might be a little bit of a shock to you in terms of, oh God, what is that? How do I look to trade that? It's simply the depiction of these markets, the price movement of these markets over the course of time. And that's how we look to assess and find trading opportunities. Price discovery is often psychological and subject to human emotion. It can at times be totally irrational. And that goes for absolutely anything. If you think of a product or service perhaps in the markets that, I know when the iPhone 8 comes out, it's going to be valued on your shelf at €1,000. Potentially for most of us that might cause us a bit of a stir, a bit of a shock. It might be quite expensive for us, but it can be totally irrational at times, and that's no different than these financial markets where assets are potentially mispriced or can at times, of course, cause irrational pricing. So to be aware of that.